Can you explain the basic principles of accounting?
The basic principles of accounting include the accrual principle, matching principle, consistency principle, and conservatism principle. The accrual principle states that revenue and expenses should be recorded when they are earned or incurred, regardless of when the cash is received or paid. The matching principle states that expenses should be matched with the revenue they help generate. The consistency principle requires using the same accounting methods and principles from one period to another. The conservatism principle suggests that when faced with uncertainty, accountants should choose methods that result in lower profits or asset values.
What is the difference between financial accounting and managerial accounting?
Financial accounting focuses on preparing financial statements for external stakeholders such as investors, lenders, and regulators. It follows generally accepted accounting principles, GAAP, and provides an overview of the company's financial performance. Managerial accounting, on the other hand, focuses on providing internal stakeholders such as managers and executives with information for decision-making. It includes detailed reports, budgets, and forecasts to help with planning, controlling, and evaluating business operations.
How do you handle accounts payable and accounts receivable?
Accounts payable refers to the money a company owes to its vendors and suppliers for goods or services received, but not yet paid for. To handle accounts payable, I would review and verify invoices, reconcile them with purchase orders and receipts, and process payments within the agreed payment terms. Accounts receivable refers to the money owed to a company by its customers for goods or services provided on credit. To handle accounts receivable, I would send timely and accurate invoices, follow up on overdue payments, and maintain a system for tracking outstanding balances and collections.
What are the components of a balance sheet?
A balance sheet consists of three main components: assets, liabilities, and equity. Assets represent what the company owns, such as cash, accounts receivable, inventory, and property. Liabilities represent what the company owes, such as accounts payable, loans, and accrued expenses. Equity represents the owner's or shareholder's stake in the company, calculated as the difference between assets and liabilities.
How do you ensure accuracy in financial statements?
Ensuring accuracy in financial statements involves several steps. First, I would perform regular reconciliations to match the balances in the accounting records with supporting documentation such as bank statements and vendor invoices. Second, I would implement internal controls and segregation of duties to minimize the risk of errors or fraud. Third, I would conduct periodic audits and reviews to identify any discrepancies or irregularities. Finally, I would stay updated on accounting standards and regulations to ensure compliance and consistency in financial reporting.
Remember, these are just sample answers, and you should tailor your responses based on your own experience and knowledge. Good luck with your accounting interviews.